I think there's also the interplay with the elections, and that's where the market is trying to understand.
The election that we don't know when it's happening, so
yeah,
therefore
but we know that it will happen.
To ascertain when monetary policy should happen, so it doesn't impact the election date.
Totally, and I think there's also an optical element here. Inflation on the headline numbers is going to fall quite rapidly. It's going to reach target pretty soon, and that will put the bank under a lot of pressure to start normalizing policy. So I think the market is trying to understand whether they do it already in June or they postpone to August until they have more evidence. My view is that June should offer them the opportunity to cut, maybe put in another cut by August, and then pause.
Yeah, and just last point on that, we've got 2 more CPIs before that meeting. I think one's the day before, I think, as well. So, yeah.
So to get to the longer-term challenge, and you've alluded to this, and it's something I think a lot of people are concerned about. We fall from an area above 3%, we get back to 2% target on inflation. But where do we go from there? Do we just bounce off the target and go back up again? Or do we stay in a steady pattern around that 2% handle, allowing the central bank some relief? How does that happen? How do we stay around 2%? Is there any prospect of that happening? Because it seems as though most people are looking at the risk that we won't stay around 2%.
Yeah, I think that speaks, you make a very important point. I think that speaks to the gradualism of these central banks. I think they will be very hesitant to cut aggressively. Probably this is a start. If they do cut in June and then August as our baseline, it will be probably a step towards a normalization, but then they will pause there and see how things evolve. There's a likelihood of a bounce in inflation as commodity prices go up. As far as the forecast goes, I think that will change many times before we get there. But that's consequential for today because, as you know, the bank conditions its forecasts in the interest rate path that we've had up to the recent rally. And so if they show an undershoot of inflation conditioned on that path, the market will read a dovish signal into that.